everyone. Welcome to Giga Metals Live Investment Summit today, hosted by Six. I am pleased to be joined today by their CEO, Mark Jarvis. Mark's going to be answering your questions today in a big Q&A session, so please make sure that you submit your questions in the Q&A chat found on the right-hand side of your screen. You get them in, we'll try and get to them. But as always, this summit is being recorded and is going to be available to watch afterwards on Six.com if you need a refresh later. Without further ado, Mark, I want to hand things over to you just so that we can get started.
Well, thank you very much, Cam. I'm assuming that those of you that are watching are already familiar with our story and that you're just looking for an update. So I'm not going to be going through a whole presentation. I'm not going to be going through a presentation at all, in fact. So any of you that are listening that are not familiar with our story, you can look at our presentation at www.gigametals.com. You can also contact Holly Miller. She can walk you more fulsomely through the presentation if you'd like. But having said that, I'm just going to assume that you're already familiar with our story. So really, this is an update. And we've had quite a busy last year or so, with the big event being attracting Mitsubishi Corp as a joint venture partner. On terms that imply, a much higher valuation than we're currently enjoying in the market. But it has given us the money to proceed full speed ahead with working on our pre-feasibility report. And it's also given us quite an interesting position regarding talking to other potential strategic investors, such as car manufacturers and battery makers. Mitsubishi Corp is a giant company. They are very familiar with mining. Although they don't operate any mines, they have multiple mines where they have a minority interest. They help to finance the mines. They'd like other people to operate. They're simply interested in getting access to the materials produced by the mines. But they do have a good in-house capability of evaluating mining projects. So with that background, I'll just open this up to questions.
All right, Mark, thanks a lot. And yeah, again, just to reiterate to everyone in the audience, if you have any questions, please submit them in the Q&A chat. It's on the right-hand side of your screen. Mark, we've gotten a lot of questions already coming in advance of today's summit. So I'm going to just kick off over to those. But how's the PFS going? Could you update the group on the progress?
Yeah, it's on schedule as of yesterday, which means that we expect to have the PFS out in June. The most recent is we were testing crushing material through a high pressure grinding roll, and it worked extremely well. We don't have the full results. Those are pending, but yeah, it worked very well. So we're looking at high pressure grinding rolls, both for uniformity of grind size and also for energy savings. It just looks like the right system rather than a SAG mill. Frankly, there's no really significant changes expected in our flow sheet from our PEA. We are doing geometallurgical testing to understand the full range of expected behavior from all different parts of our deposit. What are our recoveries here as opposed to here? Different grades, different sulfur contents, and so forth. Now we are changing the mine planning, accounting for a trolley assist instead of diesel haul trucks, and our trade-off studies show that we're going to get lower OPEX, lower emissions, and higher productivity, and it's going to improve our internal rate of return. So that's it for the PFS update.
No, absolutely, fair enough. There is a question coming in from Jason just right now, and it has to do with that PFS. So he's just wondering if you could highlight what investors or the audience members, for that matter, should be looking for in that pre-feasibility report in terms of it being positive.
Oh, I think the pre-feasibility report is going to be positive. I mean, one of the things is it's going to reflect the current nickel pricing environment. Actually, not even the current nickel pricing environment, because I don't think that the long-range price they're going to use is the same as what we're currently trading at and what we have been trading at. But it's certainly not going to be $7.50 a pound. So we've got a project that has a positive IRR at $7.50 a pound, but nothing to write home about. As the price of nickel moves up, the internal rate of return increases rapidly, and the depreciated net present value increases rapidly. That's still true. And we're working on other things that we're hoping will provide a boost to our depreciated net present value.
All right. And just staying on the pre-feasibility subject, Jason has a follow-up question. Just wondering, maybe in general, how a positive pre-feasibility report impacts the perception of projects.
It depends who you are. I think to a retail audience and even to an institutional audience like resource funds, that's what they look at. And so, a positive result would have a positive result, I think, with brokers and with institutional investors. For industry investors, it actually means less, because what they will look at, the sophisticated mining industry investors will look at, is they will look at, what's the capex? What's your flow sheet? What's your capex? Is this a realistic capital cost? What's your sustaining capital? Do I think that looks realistic? What's your OPEX? Do I think that looks realistic? And they really dive in and figure out the details of the engineering report, whereas the institutional and retail investors tend to go straight to the IRR and the depreciated net present value, and they sort of pass on all the details. Generally, not obviously in all cases. And so the industry investors, they've got their own price deck for nickel. They'll have their own assumptions about what they think the nickel price is going to do over the next 3 years, 5 years, 10 years, 20 years, and they will plug in that number to the model that we create if they think that the model we've created is reasonable.
All right, fair enough. Lewis wants to know, how involved is Mitsubishi in the day-to-day at Turnagain? Are they strategic partners, or are they really just providing money?
Oh, they're very involved. No, they're not involved in day-to-day running the company. I mean, we are the operator. I run this company, but they are very, very interested in the progress of the pre-feasibility report. We have regular meetings, 2-3 hour meetings, to update them on all the details of what's going on with the pre-feasibility study. They've got their own in-house engineers that are analyzing what we're doing, making suggestions. Have you thought of this? Have you thought of that? They are very interested, and they're getting educated about dealing with First Nations in British Columbia. They really want to be doing the right thing, and they're very, very interested in learning what the right thing is. And so we spend a lot of time on that factor. So yeah, they're very, they don't just write a check and go away. That's for sure. We spend a lot of time meeting with Mitsubishi, but they don't run the joint venture. We are the operator. However, we are an operator that wants to make sure that our partner is happy. So.
Sorry there. So that's certainly fair. Ken wants to know, do you feel like Lassonde curve methodology exists with battery-related material mines, especially when you compare that against gold and silver?
Boy, I just don't know. I mean, I look at our market cap and what's happening, and I go, oh, victim of the Lassonde curve. I mean, we're trading about $30 million, and it's kind of a ridiculous price, frankly. In our view. And so it's hard to know precisely when that's going to change. I just feel like this is a situation where, I mean, the whole sector is heating up quietly. Canada Nickel, which is, another large low grade, the Crawford project is another large low grade open pitable sulfide nickel deposit. They recently attracted Anglo as a partner. Um, you know, One by one, these large projects are getting picked off, and so there's a lot of interest by industry in this model, um, but the market in these stocks has not taken off. And I think what's going to happen is you just go along, nothing, 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 and then something's going to happen, and all hell will break loose. And you don't know exactly when it's going to happen, but I think at some point things are going to get very exciting, and it's very difficult to predict exactly when.
Right. Victor is wondering if you're looking for any other opportunities within the copper, lithium, or battle metal sector.
We are not. We shut down Brazil. We didn't get enough encouragement from our exploration results in Brazil. And we've concluded that the board has concluded that we're to the point where anything else is a distraction. We've got a very good technical team, but it's a small team. And, I just think that to be looking around for other opportunities, it's a distraction at this point. We think we're getting, moving along very nicely with this project. And that's going to remain our entire focus.
All right, it's good to be focused. Okay, Victor wants to know, is there a mine operator already lined up if and when you break ground?
No.
Simple enough. Okay. Jason's got another question for us. With all the battery and car manufacturing plants that are planned in North America, how has the size and location of the project affected interest in the project?
Well, I think the location in North America is very good. And frankly, when you look at, all of the known deposits in North America, you can develop them all, and it's still not enough. And that's why I believe they're all going to get developed at some point. And in fact, a lot of the people that are planning gigafactories, wakey. I mean, there isn't enough nickel. And so unless you're planning to get all your nickel from Indonesia, even then, there's not enough nickel for all the planned gigafactories. So, it's good to be in North America because you're not shipping your product as far, and so you've got a lower carbon footprint for that reason. It's good to be a low carbon project, possibly even a carbon neutral project, possibly even better than that. That's ongoing research that we're doing. And it's good to be a Canadian project because, people know, the buyers know that if you're sourcing your raw materials from Canada, you're sourcing them from projects that have been through a rigorous environmental assessment. And so, you're talking about some of the highest environmental standards in the world. So it's a good location.
No, fair enough. And actually, just speaking of the environmental system, Ronald is just bringing up a couple of concerns that he'd love if you could touch on. He says that it's a very attractive project, but he's concerned about the number, value, and timing of those 28.4 million warrants. He's also raising, what the concern is about how this is being received by various First Nations within BC. They might be concerned about the impact on watersheds and fish breeding streams. It could be a position where a lot of criticism and resistance could be drawn from. So if you could elaborate on any of that.
Okay, well, there's a few questions in there. The warrants provide many ways to play. And frankly, I think once the action starts on this, that's not going to be an impediment. I think, frankly, that once things get going here and the stock starts to trade real volume, it'll be good to have, the ability to trade a lot of volume. I've been through this before with other companies in my career, and it's not a bad thing to have a lot of float, and that's really what those warrants represent, is more float. In terms of First Nations, we're primarily dealing with the Tahltan and the Cascadet. The Tahltan control access to our project. They're very business friendly. They are doing very well in the mining business. They have, high environmental standards, but as long as you stick with those high environmental standards, they don't have a problem with mining per se. We're also dealing with the Casca, and the Casca communities are downstream of the Turnagain River. So their concerns are mostly focused on what effect will our project have on the Turnagain River, and we are designing this to be extremely safe in terms of the Turnagain River. Our tailings management facility is a high cost facility because we're doing what's called centerline construction, which is the safest way you can make a tailings management facility. We're designing it with small ponds, so it's not like the whole tailings management facility will be underwater. There will be a small pond in the middle surrounded by beaches. And it's been designed that way partly for safety reasons, but also to expose as much of our silicate tailings as possible to the atmosphere so that they can absorb CO2. And as they absorb CO2, the silicate tailings convert to carbonate minerals. And the CO2 is locked into a mineral form for hundreds of millions of years. Which is why we can aim at being, a zero carbon project. But the sands also go through a partial cementation process. So, yes, they have concerns. The Casca have concerns downstream, and they should have concerns. I would too. But I think, are able to show them and will be able to show them that we are doing, a very good job of protecting the Turnagain River.
All right, great. Jeff is wondering, what are you expecting or hoping for in 2023 in regard to how this mine is going to progress and be reflected in the stock price?
Well, I think delivery of the preliminary feasibility study is going to be a major milestone. And it's going to be a major milestone, I think, for the market. We'll see. I mean, I can never predict the market, but it's also going to be a major milestone for all of the potential strategic investors that are looking at potentially getting involved with this project. And so, I'm not saying that everybody's going to wait for the pre-feasibility. It's a possibility that we could do something with the strategic before it even comes out. But I would have to say that the odds are that we won't do anything until this comes out. So I think it's going to be a major milestone. It's going to validate the project, I believe. And, that's what's going to lead to kind of the next stage, I think, of getting strategic investors involved. And we're, again, really focused on the car companies and the battery companies at this point.
Right. Question about what your relationship is like with the BC Liberals and if it's good. Is this government pro-mining for green metals?
Well, I mean, the Liberals are not in power right now. They're the opposition party. And I try to stay non-political. I support both the Liberals and the NDP. And we have communications with both parties, but the NDP are in power. We've got a new Minister of Natural Resources. We've got a meeting lined up with her. She's the Minister of, it's called Energy, Mines, and Low Carbon Development. So she is an environmentalist, our new minister, and she's the former mayor of Tofino. And I think her being an environmentalist is actually helpful for us, because this is a very large project with, relative to its size, a very low environmental impact. And we're producing green metals for the electrification of everything. And we are a low carbon project. So, and in general, the government is certainly not averse to mining as long as it's done in a responsible way.
Right. Raziel wants to know if you could also address entering a quote green nickel supply chain. Has Mitsubishi raised the possibility of an offtake?
Well, Mitsubishi has 15% of the offtake currently. I'm sure they would like more, but that's for later discussion. It's quite interesting in that the U.S. is in talks with Japan and other allies about this Inflation Reduction Act, which sources material from preferred partners. So under the Inflation Reduction Act, because we've got a free trade agreement with the U.S., then sources from Canada will be preferred in the sense that you can get cheaper cars. You can get rebates on buying electric vehicles if the materials are sourced from approved sources, which Canada is one, as is Mexico. But I don't think there's any nickel production in Mexico, but as is Australia, where there is nickel production. But they're in discussions with both Japan and Europe about adding them to the list. And that's quite interesting. So we'll see.
Okay, fair enough. Jonathan has sounds to me like a pretty theoretical question, but if sometime in the future Kucho Copper and Giga Metals came to be owned and operated by the same company, what kind of economies of scale and shared costs could potentially be applied to the mining of both deposits, in your opinion?
That's a really interesting theoretical question, because, we looked at years ago, what would happen if we used Kucho Copper as a starter pit? I actually asked the question, because if you mined it as an open pit deposit, you could mine it out, in like 2 or 3 years. And Kucho Copper is uphill from us, and then you would run the ore downhill in the trucks to be processed at our site, and then the trucks would run back uphill empty. But the answer is, the mining engineers just shot that down pretty quickly, because it's just completely different processing type of circuit for a VMS, primarily copper deposit. Now we do cooperate with Kucho. I mean, we've got interests in common. For example, the road coming in from the highway. A lot of that will be held in common, and so we do cooperate with Kucho. We share information, and they're good neighbors, and so are we.
Okay. Jeff wants to know if you could reiterate just when is the PFS expected to be completed?
June.
Great. And another question, is the goal for Giga at Turnagain production or acquisition? If open to acquisition, who are potential buyers?
Well, I mean, if Giga gets acquired, it's probably not going to be our choice. I mean, and the potential buyers are any of the giant, international mining companies, that want an exposure to nickel. And so, and it's interesting because Mitsubishi Corp is already partners in other projects around the world with many other major mining companies. So, I think that we're on the radar screen for sure. We're not certainly not immediately looking to sell this company, but sooner or later, who knows? We'll just have to see.
No, absolutely. Jeff wants to know, just for clarity's sake, are we still talking about 7 billion pounds of nickel and 350 million pounds of cobalt?
I don't have the most recent, the summary of the most recent resource estimate in front of me. But whatever is on our website, I think it's 7 billion pounds of nickel. I think that's right, and that's in measured plus indicated. I forget the cobalt numbers right now, but the cobalt is basically 1/18 of the nickel number. The cobalt and nickel are both contained within pentlandite, and so they float together. And as I recall, it's 7 billion pounds of nickel in the measured plus indicated category, and another 5 billion pounds in the inferred category. But we're mostly paying attention right now to measured and indicated because that's what you need to take into a pre-feasibility study and ultimately a feasibility study.
Right. Okay. The question that's come in previously, what was the result of Martin Vajra's trip to Japan with Minister Wilkinson?
Well, it was a good trip. It was nothing, specific or immediate. There were introductions to Japanese companies that we hadn't, we've met most of the Japanese companies. But there was, I think, one company that we hadn't met before. But it was also an opportunity for Martin to spend time with the minister and the deputy minister and so forth to talk about things that the government could do to support critical minerals development. And they've got a policy, the government has got a policy to support critical minerals development with infrastructure investments. They've got a $1.5 billion fund. And we've got some very specific ideas about how some of that money could be spent in British Columbia to support critical minerals development in the north, and particularly for our project. So it was an opportunity to get in front of the minister and spend some time with him and with the deputy minister to make them aware of our project, to make them aware of infrastructure challenges that we face that the government could be helpful with.
Absolutely. Jason has another question. Given the emergence of new battery form factors that may or may not utilize MHP, could you explain the simplicity of the mining process?
Well, okay. The mining process that we use to make a concentrate is simplicity itself. Crush it, grind it, and we're now quite certain that we're going to use high pressure grinding rolls from some of the work that we've done, and then put it through simple froth flotation. And that just works beautifully. 99% of our nickel and cobalt are contained in pentlandite. So there's one mineral that we have to target to recover, suppress everything else. And that just makes everything so simple. We don't have any awareurite mixed in, which is a nickel iron alloy that a lot of the other deposits have. So we don't have to use magnetic separation. We don't have a lot of the alteration materials that are contained in older deposits. So we don't have to use desliming circuits. It's just crush it, grind it, float it. And that gets us to a very nice, high-grade, clean concentrate. And by clean, I mean there's very few deleterious elements. Now, to take it beyond that, there's a number of options. You could put in a pressure oxidation circuit and frankly make anything you want. I mean, we've been looking at mixed hydroxide precipitates. You could convert directly to sulfates. You could add other things to the pressure oxidation circuit and create metal or briquettes or basically anything you want. So we were looking at adding on, and we're still thinking of adding on at some point, a pressure oxidation circuit. But frankly, we're not in a hurry to do that now. When we were talking about that before, payables for MHP were in excess of 90% for both nickel and cobalt. And then the zero COVID policy in China took a big bite out of the demand for nickel in that form. And so payables collapsed to like 60%. And they've recovered since then, but payables are still under 80% for both nickel and cobalt for MHP. Well, we know that if we just simply create a concentrate and sell it to a smelter, we'll get payables somewhere in the high 70s, maybe even to 80%. You know, we'll see what the engineers and what the marketing people come up with for the PFS. So given that, you know, unless there's a significant lift in the payables for MHP and other chemical forms of nickel, it's unlikely that we'll be building a pressure oxidation circuit on site and incurring that capex and opex, because that would not be incremental, you know, economically. So for now, we're just going to stick with the simple model of selling to the smelters, which then can turn around and sell LME deliverable nickel forms.
Okay, great. This question about your forecast on nickel pricing now, but do you think that we're likely to see a lot of volatility again this year, or do you think that they've settled?
We're not going to see the kind of volatility we saw in the short squeeze, but nickel prices on the LME are quite volatile because volumes have gone down, and so that leads to increased volatility. And boy, the whole subject of nickel pricing is quite interesting. You know, I mean, for our project, you know, realistically, we're 5 years away from production at best. And so the price that really matters to us is, what's the price of nickel going to be 5 to 15 years out? Most of the pundits and most of the experts that price nickel, they use reversion to mean formulas and all this other stuff. And, you know, I think that the nickel price we're going to use in the PFS is going to be certainly higher than we use in the PEA, but it's not going to be as high as the nickel price is now. And it's not going to be as high as it's been over the last 12-month average. And I just, you know, personally, I look at it, I'm not an expert in marketing nickel, and I'm not an expert in predicting, you know, anything really. But I just look at that and I go, my God, you're kind of missing it, because just from a common sense point of view, if there's not enough nickel for all those gigafactories, the price has got to do something to stimulate more production. It's just that simple, in my simple mind. And so, you know, I think over the next couple of years, you can make a case, well, there's, you know, perhaps there's a surplus this year. You know, certainly in ferronickel, there's lots of surpluses out there. You know, and then the cost of converting ferronickel to forms that are suitable for batteries, those costs are quite high. And so you have to factor in those costs. You can do it, but it costs money. And so, you know, so how much extra do you get by spending the extra to convert it? Well, right now, not much. But that could change. I just think, well, I know what we're going to do. We're going to come up with a price that's higher than 750 and lower than the current price. And what I want to do is, you could do a sensitivity analysis within your pre-feasibility report. And I think I'd be interested in looking at the average price of nickel on the LME for the last 12 months, or the last 12 months before June when we come out with this. You know, what's the average nickel price, and use that as our high case. And I think that's pretty conservative. If the actual price of nickel is your high case in your sensitivity analysis.
I mean, that definitely, all right. I mean, that would be interesting to see. Jeff wants to know, does the anticipated billion plus infrastructure costs considered a negative to advancing this resource?
Well, every bit of capex, it's not $1 billion of infrastructure costs. It's pretty close, though. I mean, it's 700 or 800 million. So okay, not $1 billion. It's a challenge, and it's something to overcome. And we have to factor that into our economics. Okay, so however, as I mentioned, we are in conversations with all sorts of different levels of government about the government stepping in to support. For example, the power line is a big part of our infrastructure cost, and if we could get the power line extended further north, that would be extremely helpful to the economics of this project. But it would also be helpful to Canada, because you're sending a signal to international investment money that's looking to invest in critical minerals in a jurisdiction like Canada. You're sending a signal that, yeah, it's not just talk. We're here. We're willing to improve the infrastructure to support development of critical minerals. And I just want to mention there's another part to that policy that is of extreme interest to us, and that is that they're looking for critical minerals to fast track the environmental assessment process. And so I don't know how that's actually going to work in practice, but they're certainly talking the right way. And they're not talking about lessening the standards for environmental assessment. What they're talking about is just simply the government being more responsive as you go through the process and turning things around more quickly. That would be extremely helpful. And it also sends a good signal to the international investment community.
Right. Okay. Adrian wants to know how much emphasis is going to be put on carbon sequestration. Is there a significant impact, or might you be criticized for greenwashing?
Okay, well, basically, we don't talk a lot about ESG because so many people talk about it, and there is so much greenwashing. And frankly, I roll my eyes too when I see all this greenwashing that's going on. But we're basing the fact that well, for starters, we will in fact be a low carbon project. At the very least, we will be towards the very, very lowest worldwide nickel projects. That's a fact. It's not greenwashing. We are in fact spending money to support research into CO2 sequestration in our tailings. And we know that our tailings sequester CO2, and Dr. Greg Dipple at the University of British Columbia, who we've been working with on this, has been studying this for 20 years. He's developed methodology to measure how much CO2 gets absorbed into a silicate tailings pile. So this is all based on science, real science. Now, his methodology has not been certified by anyone yet, but that's something that's being worked on, and I don't see any reason it can't be certified. And if it's certified, then you can get carbon credits. You can actually sell carbon credits or use them yourself for your own project. So that, because of all this, we could get possibly to zero carbon or better with the carbon sequestration added to our already low carbon footprint.
All right, really interesting. Okay. Jason's bringing up, mining engineers aren't typically staffed on car and battery companies, but could you explain and dive into how mining engineers could accelerate discussions with said companies?
Well, it's a very good point, Jason. And again, talking to a car company, I met a mining engineer for the first time, and so I think they're starting to understand that if they're gonna invest upstream and if they're gonna vertically integrate, and I think they're starting to realize that they have to, some of them are anyways, that you need a mining engineer to be able to spot the difference between the projects. You want to invest in a good project. You don't want to invest in a project that ends up being a loser. So it was interesting to meet a mining engineer. Now I have to say this was a mining engineer that had spent most of his career in oil and gas. So he hadn't, but at least he's trained as a mining engineer, and he's reading our engineering reports with great interest and asking detailed questions. So that's a good thing. But to date, most of the battery and car companies I've met do not have a mining engineer on staff, and I think that's really slowing them down. On the other hand, Mitsubishi Corp has mining engineers, metallurgists, geologists, and all of that on staff. So they've got the ability to do a proper due diligence. Now, I should also point out that a car company or a battery company could hire an engineering firm to do their due diligence for them, and that's probably the best short-term solution, at least for them.
Okay, fair enough. Mark, I think this has been a great Q&A so far. I only see one other question currently queued up, so I just want to remind everyone in the audience that if you do have questions, submit them now. But with that, Victor wants to know if there's any chance of hitting high-grade nickel in the mine with future drilling. Really a question about how much of the property is currently drilled out.
There's always a chance. We've had sniffs of high grade here and there, but we had 20 meters of 1% with one hole that I recall. We've had some high grade right on the edges of the deposit. And we think that by volume, that the prospective rocks, the rocks that we think contain nickel and cobalt in sulfide form, we've drilled about 20 or 25% of what's there. And it's all connected. It's all one big ultramafic body. It's just, we've got 1.5 billion tons measured and indicated already, and something like 1 billion in inferred. I mean, we've certainly got enough, and drilling is expensive. So one of the reasons that we're not really taking on other exploration plays and sort of going over here and over there is that, we've got it all right here. And, we've got a 37-year mine life for a big mine was modeled in the PEA. How much will it ultimately be? Can't say until we drill it. But, we do have drill holes 5 kilometers away from our resource that are kind of similar to what's in the resource. So we've got lots of indications that we've got a lot more prospective ground to cover with drilling, and the deposit is wide open.
All right, great. We do have another question that's just been thrown in here from Jassim. First of all, thanking you for doing the Q&A, which I echo, but is financing being discussed now with Mitsubishi and bankers, or must the DFS be completed first? And follow up to that, will the DFS consider the updated resource size or the same 37-year mine life and capacity as the previous PEA?
Yes, well, the pre-feasibility, to answer the last question first, the pre-feasibility will be using the new resource estimate. It'll be using all the most recent data. And we will only be using, in a preliminary economic assessment, you can use inferred resources. In a PFS and a bankable feasibility report, which is the next stage beyond, you have to use measured plus indicated only. And then you've got the ability to convert resources to reserves if they're economic. So we're always looking for more money. Pardon me. I mean, the next phase after the PFS is done, to take this project all the way to full bankable feasibility, including the environmental assessment, which is a significant cost, that'll be somewhere between $40 and $50 million. That's our estimate currently. And so our preferred method of financing, we're not talking to bankers. Our preferred method of financing is to bring in another partner at the project level. And that's what we're talking about. We have enough money to do this PFS. We will have money left over if we stay on current budget. We have enough money in our treasury to keep going for, G&A for, for a good long time. So we've got no immediate need to finance, which means we can be patient and we can focus on the forms of financing that we prefer. So I hope that answers your question. We are looking for a strategic investor to come in for another 20 to 25% of the project. And those discussions never stop.
No, fair enough. Mike wants to know, do you see an opportunity for IRA funds?
IRA funds, what?
Mike, if you wouldn't mind dropping in the chat, just some specificity, and we can come back around to that question. But otherwise, Robert has a question about what you think would be a fair value share price.
Well, if you look at what Mitsubishi, a knowledgeable buyer, paid, that would imply a fair value for our stock of about somewhere between 70 and 80 cents a share. I think Mitsubishi got a great deal, and we're not looking to sell the next chunk on the same terms because we're using the money that Mitsubishi invested to advance the project. So, so today, 70 to 80 cents based on the Mitsubishi transaction. Tomorrow, with the pre-feasibility study done, I'd be looking for higher numbers than that.
Great. And I've been notified that Michael is asking if you see an opportunity for any funds coming from the Inflation Reduction Act.
Well, the Inflation Reduction Act, at least the parts of it that I'm aware of, have more to do with tax incentives to EV makers. So they don't involve direct investment. However, the Department of Defense is looking to make direct investment in projects for critical materials. And we have had those discussions. And yes, it's possible in future. It's not today, but once we get the PFS done, I think the Department of Defense, it's actually interesting. At first they said, well, we're not looking to invest in anything that doesn't have a full feasibility report. We said, fine, we went away after the initial discussion. Then they came back to us because they realized there was nothing out there in nickel that's got a full feasibility report other than Dumont, and Dumont's on the sales block. It's a sales process being managed by Goldman Sachs. But other than that, there's nothing with a full feasibility report. So they came back and said, okay, once there's a feasibility report, we would take a serious look. And so once the feasibility or once the pre-feas is out, we will talk to them again.
All right. Well, Mark, I think it's been a really great Q&A session. We're getting a lot of thank yous for your commitment and passion for this project. Your expertise and candid responses are much appreciated across the board. It sounds like I want to echo that sentiment. I also, of course, want to thank everyone in the audience, especially those who participated by asking questions and making this event what it was. But before we wrap up, Mark, I want to pass things back to you just to give you an opportunity to have any closing remarks.
Well, first of all, thank you, Cameron, for putting this together. And I just want to thank everybody that's participating. I find this actually quite stimulating because I sometimes get questions that I hadn't even thought of. So that's always fun. So thank you all for attending, and stay tuned.